What is up, guys? It's Flash back with some more charts in another video. Today is Tuesday, March 26th, 6:30 p.m. Eastern. Markets are closed. And my idea for this video today is you've seen my puzzle pieces videos before. I kind of want to do a version of that while also comparing where we're at today in general markets with the late 1960s slash early 1970s, because I think they're pretty similar. And so what I'm going to run through is why I think that. Of course, I'm going to use some sort of ratio, some fractals from previous years, and tell my story of how I'm kind of seeing things. If you like this analysis, feel free to drop a like, drop a subscription if you're interested in learning more. But my plan is to kind of continue this and see how it tracks. So just jumping right into it, I'm going to go on. This is the S&P 500. And what I'm comparing, what this fractal is, if we drop back onto the line chart, is the same fractal from the late 1960s slash early 1970s. So what I did was I took those bars and I pasted them up here. And what I did was try to match up, see this little peak right here? I tried to match it up kind of like this. And you may say that doesn't quite line up. And I would probably agree with you in terms of the height of the moves. But what I'm kind of looking for is this dip, this correction, back up, making a higher high. I'm kind of expecting a similar correction into what this fractal would say is April of 2026. And then we go back up, make a higher high, and then we come back down for a correction, and we go back. Essentially, this is what I'm kind of referring to in my previous videos, is we go sideways in the S&P for, it's crazy to say, but a decade or so. And I'll tell you why I'm thinking that. It's not out of the ordinary for the S&P to do that. It did that back in 99 through 2013. So it's 14 years. It did that back here in the late 1960s, early 70s. 15 or so years. So I think it tends to happen when inflation runs hot. There's something to be said for quantitative easing, printing money, and what that does to dollars in circulation, the price of certain assets, what that does to gold. And so, so that's step one. Let's comparing the fractal of the late 1960s, early 1970s S&P 500 to today. I think it may not match exactly, but it may be rhyming. And so what I'm going to also jump into is the gold to SPX ratio. And so let's ignore this fractal for a second. But what also is kind of making me say this and give me that general feeling is this turning of the ship in terms of gold looks like it's about to start outperforming the S&P 500. And it does that because it senses and it sniffs out inflation and our purchasing power, what a dollar buys these days. And so I think as gold kind of reprices itself, or you could say the S&P is kind of taking a break, this bull shape is kind of telling me that we may be in for a run of gold outperforming the S&P 500. And let's take a look at gold. I mean, look at what gold's done over, since we came off the gold standard in 71, which is back here. This ticker doesn't quite track it, but really what I'm talking about is gold is massively breaking out. It's showing a ton of strength right here. Here's kind of my projection for the rest of the decade and beyond. So I would say this will likely outperform the S&P 500. And if it gets to the upwards of this channel, $6,000 gold, I would say it's a very conservative price projection in terms of what I'm reading online, what I'm seeing on YouTube, other analysts that I follow. People could say it could go to 12,000 or beyond, or maybe it's just 3,000. But I think this kind of makes sense in terms of a repricing of gold because of inflation yada, yada, yada. You can kind of put whatever story, whatever storyline you want, but there's no denying gold is super strong. It's breaking out of a 3 or 4 year base, maybe an even longer one. This is a huge cup and handle pointing to higher targets. Okay, that's a given, right? So we have gold breaking out. Gold versus the S&P looks like it's turning the ship, right? If this arc holds up, we're gonna know, by the end of, hopefully by the end of 2024, we'll know if this is kind of poking its head up, or it can get spiky right here, as we've seen. But what I did was same thing what I did with the S&P 500 in the late 1960s, early 1970s. That's this fractal right here. Go back on the line chart. So I copied and pasted this, and I kind of just put it over here, right? So let's kind of see, first of all, let's make this a little bit brighter so that we can see it like that. And so, okay, so there's this little hump right here, comes down, gotta silence the phone, sorry about that, comes down to this consolidation period, kind of rounds out, right? We look back over here. This wasn't quite a perfect bowl shape, but it's a rounded type of bottom. And then gold severely outperforms the S&P 500. Gold takes off. And again, inflation was kind of running hot back then, right? And so, again, this doesn't line up perfectly, but it might be rhyming. So it's another kind of piece of the puzzle, right? And, I like this stuff. I think it's fun to figure out. And then okay, so now let's look at like NVIDIA. That looks like a wedge, looks like it could, I feel like we're nearing the end of NVIDIA. I feel like we have to be. But obviously anything can happen. We can keep going up, but looks like that could maybe do some sort of correction in the near future. We look at Bitcoin making a higher high. I think this is kind of leverage to the NASDAQ, leverage to the S&P. So I'm not sure what Bitcoin's going to do. I consider it a tech stock. It's technology. Yes, there's an argument to be made about Bitcoin and the limited supply, and it's a perfect store of value, store of wealth. I get that. But the way it trades, it acts like a tech stock. That's kind of through my research, that's what I found. So I also want to talk about, oil. Look at XOP. XOP is breaking out. I've kind of talked through this before. Gold, inflation, oil, inflation, they kind of go hand in hand. Commodities. OIH, I think, looks pretty good too. We'll go to oil on the weekly because it's easier to look at. Like, this is massive breakout. Bear with me. Like, oil, you could call that a huge bull flag. Breakout, rounded bottom, back test. I mean, we could be coming up here for all we know, right? And I think that's what XOP is trying to tell us. Like, hey, there's something to be looked at here, boys. XOP, OIH, and then my beloved URA. Like, URA's already made an awesome run, and I think it's going to continue it. That's why I love tracking the uranium plays, because I think they're so explosive. I think they have a ton of upside, but so does XOP, OIH. A lot of these oil plays also have a ton of upside, so I'll probably make a video on them. But you look at like these are, and then you like compare it to the S&P, basing out versus the S&P, basing out versus gold. And then you look at Apple. I think it's rolling over, coming down. You look at Tesla rolling over, coming down for this foreseeable future, right? And so my point is, I think we're rhyming to the late 1960s, early 1970s. I think that you can kind of see it in maybe a couple of these ratios, gold versus XPX. And, and I say this often, but we need time. We need more time for this to kind of work itself out. We need more data. But again, I think we'll have a much better idea in late 2024, early to mid 2025. So I'm going to leave it there, guys. A little bit of a different video. You know, I like to put the puzzle pieces together. And, you know, I'm looking for longer term investments, buy and hold strategy, and ride a massive bull market to the top. So thank you for tuning in. Probably didn't make it to the end, but if you did, drop a like. I'll see you guys in the next one, and take care. Peace.